Hey everyone! I'm really glad you're here because today we're diving deep into something every NIO investor needs to fully grasp: the real costs, partnerships, and strategic moves behind NIO's game-changing battery swapping network. Whether you've just started following NIO or you've been holding your shares through the highs and lows, understanding what's happening beneath the surface with their battery ecosystem will help you see just how big their potential truly is and why so many industry players are jumping in. So, sit tight because we're breaking this down step by step. This is not financial advice. Please do your own research. When people talk about NIO's battery swapping, they often just mention the convenience pull-up: swap your depleted battery in a few minutes and drive away with a fully charged one. But as investors, it's crucial to know that this model has multiple layers of costs and partners keeping it all running smoothly. So, let's start with the fees that NIO users actually pay. There are three key costs connected to battery swapping. First is the battery rental fee. This is basically the cost of not owning your battery outright. Instead, you lease it. This rental option is part of what makes NIO's cars more affordable upfront for buyers, which helps boost adoption. Second, there's the battery upgrade fee. Imagine you want to switch from the standard battery pack to one that gives you a longer driving range. There's an additional cost for that flexibility. It's a clever way for NIO to offer customizable driving experiences without forcing every customer to buy the biggest battery from day one. Finally, the third fee is the battery swapping service fee itself. This is roughly $25 per swap for those who don't have free swaps included in their plan. Many NIO owners get several years of complimentary swaps when they buy the car. This is the cost NIO absorbs to keep customers loyal and to differentiate from other electric vehicle brands that rely only on charging. Now, behind all this is a battery management company. You might not have heard much about. It's called Mirattery. This company actually handles the day-to-day management of all the batteries in NIO's swapping network. In other words, while NIO operates the stations, Mirattery keeps the batteries circulating, maintained, and upgraded. Here's what's really interesting: Mirattery isn't fully owned by NIO. It's a joint venture with multiple stakeholders, including the giant battery manufacturer CATL, the same company that builds the battery cells powering not just NIO, but many other electric vehicles worldwide. So, CATL doesn't just build batteries and sell them to automakers. They're also invested in the long-term success of swapping infrastructure. As of early this year, NIO itself holds the biggest single stake in Mirattery, nearly 19%, while CATL holds a meaningful slice too, somewhere around 10% to 12%. This strategic structure means that as battery swapping grows, both NIO and CATL stand to benefit financially. Now, why is CATL's involvement so significant? Well, for one, they've been ramping up their investment in Mirattery. That's a clear sign they believe battery swapping isn't just a niche solution for a few luxury cars in China. They see it as a major pillar of the global electric vehicle ecosystem. Remember, CATL and NIO already have a separate partnership to co-develop battery packs, and they've even announced plans to jointly build new battery swapping stations. CATL is putting real money on the table, up to $300 million, to expand this infrastructure alongside NIO. That level of commitment speaks volumes. It shows that industry insiders, the people who really understand battery technology and economics, see battery swapping as more than just a nice-to-have. They see it as a scalable, profitable business with huge potential. And look, if you've followed NIO for a while, you'll know they've spent years building out their swapping stations. It's not just an idea on paper. This is real, with physical stations deployed across China. In fact, NIO's battery swapping stations have been rolling out for over 7 years now. No other automaker in the world has come close to matching that pace or scale. Sure, CATL has partnerships with other brands, but when it comes to real-world deployment and customer adoption, NIO is the clear leader. What's even more impressive is how battery swapping fits into NIO's broader energy ecosystem. They're not just focused on swapping, they're also investing heavily in conventional charging infrastructure. As of today, NIO operates over 28,000 public chargers. To put that in perspective, the second largest electric vehicle company in China doesn't even have 20,000. This network effect makes it easy for NIO drivers to stay on the road, whether they choose to swap or charge, and it helps lock in customer loyalty for years to come. The bigger picture here is that more companies worldwide are starting to see how valuable this model is. For example, a company in Europe is working on battery swapping stations compatible with the Fiat 500, a small city car that could benefit hugely from the convenience and time savings of swapping in dense urban areas. This shows that the concept is catching on outside China too. And here's where this ties back to you as an investor. The market still hasn't fully priced in just how powerful this ecosystem is. Right now, NIO's share price is still sitting far below its all-time high. It's down over 90% from its peak. But if you zoom out, you can see the writing on the wall. The partnerships, the growing network, the strategic stakes in Mirattery, the massive charging infrastructure, they all point to a company that's laying the groundwork for steady, profitable growth. Of course, NIO's journey has been volatile. Anyone who's tried to time this stock perfectly knows how tough that is. But when you look at the fundamentals, the day will come when the market wakes up to the value locked up in these assets. And when that happens, short sellers who bet against NIO's battery swapping vision will wish they hadn't. So, if you're still waiting for the perfect entry point, just know that you might never get it. Volatility is part of the deal, but the long-term outlook is where the real opportunity lies. As NIO edges closer to profitability, with more revenue streams from swapping, upgrades, and energy services, that momentum will start to show up in the share price. To wrap this up, here's the big takeaway. NIO isn't just an electric car company. It's an energy services pioneer, an infrastructure builder, and a leader in battery technology partnerships that others are only now trying to catch up to. CATL's deeper involvement is a clear sign that insiders see battery swapping as a cornerstone of the electric vehicle future, not just in China but globally. So, if you believe in the electric vehicle transition and the practical solutions that make owning an electric car easier, battery swapping is something you can't ignore. It's time to see beyond the daily stock chart swings and recognize the value being built behind the scenes. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.